latest news about Credit Suisse. They just were on the brink of collapse.
European markets have closed down more than 3%, spooked by a major sell-off of shares in the Swiss banking giant Credit Suisse. Coming days after the collapse of the US-based Silicon Valley Bank, it's prompted fears of a full-blown crisis in the sector.
UBS will buy Credit Suisse for 3 billion Swiss francs.
I'm wondering whether you would be open to assisting further Credit Suisse.
The answer is absolutely not.
Credit Suisse chairman apologizes to shareholders at its final annual meeting for the banks.
Und tut mir aufrichtig leid. Und tut mir aufrichtig leid.
With more than 300 branches across 50 different countries and greater than 50,000 employees, more than 2 million clients, this Swedish bank developed into one of the biggest providers of financial services worldwide. What was once a monumental success has become a dismal failure. Let's talk about Credit Suisse's 167 years in the banking industry. How does a multi-generational financial giant suddenly come crashing down? Credit Suisse is a well-known multinational investment bank and provider of financial services with its headquarters in Zurich, Switzerland. It is also the second largest bank in that country. It offers instruments in private banking, asset management, investment banking, and shared services. Credit Suisse is regarded as a globally significant and systemically important bank by the Financial Stability Board. Among some of the largest institutional shareholders in Credit Suisse are the Saudi National Bank, the Qatar Investment Authority, BlackRock, Dodge & Cox, Norges Bank, and the Saudi Alan Group, a literal who's who of heavyweight banking behemoths. Holy cow. In addition to this, it is renowned for its strict banking secrecy and client confidentiality. This is Epic Money Story, unraveling tales of power, failure, wealth, and empire. Credit Suisse's 167-year history began on July 5, 1856, with a young politician and businessman, Alfred Ascher, who had a vision to develop the Swiss railway system and connect Switzerland to other parts of the world without the aid of power-hungry foreign capital. He established the Swiss Kreditanstalt, or we'll just call it the SKA, in Zurich to raise money for the construction and offered individuals who would lend money a decent interest rate. Now in 1870, SKA opened its first foreign representative office in New York. SKA made a significant contribution to Switzerland's economic growth by supporting entrepreneurs, aiding in the creation of the nation's monetary system, and investing in the Gotthard Railway, which did ultimately succeed in opening Switzerland's rail connection to the rest of Europe in 1882. If you trace any bank back to its beginnings, there's always something about railways, isn't there? Also, it supported the development of Switzerland's energy grid. The bank established its first outlying branch in Basel, Switzerland, roughly 30 years after moving into its brand new headquarters in Zurich's Paradeplatz, one of the most expensive pieces of real estate there in Switzerland, which has also become synonymous with wealth and Swiss banking now. In the late 1800s, SKA established banking and insurance businesses in Germany, Belgium, Geneva, and other countries, and in the early 1900s, it began to convert heavily to retail banking in reaction to the emergence of the middle class and competition from rival Swiss banks UBS and Julius Baer. Credit Suisse continued to fund the nation's electrification and, in reaction to a coal crisis, assisted in financing the National Railroad switch to electricity in 1924. To concentrate on the investment business, SKA established the Swiss American Corporation in New York as of 1939. And over 2 decades later, SKA was finally granted a license to conduct business in New York as a full-service bank in 1964. With its Swiss American Securities division, SKA became the first Swiss bank with a presence on the New York Stock Exchange. CS Holding is established as a sister company of SKA to contain the holdings of all its industrial businesses at this time. CS Holding buys a 45% stake in First Boston as part of a rescue deal, and then it decides to rename it as CS First Boston. A notable mention there is that around 1934, First Boston had made its debut as the first ever publicly traded investment bank in the United States. That's pretty cool. Talk about inception. People started to look around cross-eyed at the mention that they could actually make an investment in a bank that makes investments. Well, it was a simpler time. We know things have gotten a lot more complicated now. Let's get on to it. 1989, CS Holding became the SKA Group's parent. The business then acquired organizations like the Winterthur Group, Swiss Volksbank, Swiss American Securities Incorporated, Bank Liu, and the list goes on and on. All this was happening between 1990 and 2000. They also started offering deposit counters, like a regular old bank, currency exchanges, and savings accounts to their consumer and the middle class. By 1977, CS Holding had undergone a reorganization, dropped the SKA name, and then became Credit Suisse Group. The bank launched DirectNet, which was its own online banking service, and this was also Switzerland's first internet banking service. Unlike competitor UBS, Credit Suisse weathered the global financial crisis without actually requiring government assistance around 2008, and thereafter the group acquired Claridin Liu and combined private banking and asset management into one division. Credit Suisse has been embroiled in numerous scandals and financial mismanagement over the years. And although it did make it through the 2008 crisis, that does not mean there was no substantial impact there. The bank actually experienced a huge issue when investigators began looking into a fraudulent banking and foreign exchange trading scam at the bank's Chiasso headquarters, involving actually more than $1.2 billion. In addition, Credit Suisse faced $475 million in penalties from the US and British authorities after being involved in a bribery scandal in Mozambique involving loans to the state-owned businesses there. And between 2012 and 2016, the People's Republic of Mozambique received loans from Credit Suisse totaling around $1.3 billion. The funds from those loans were supposed to fund projects like shipyards and fisheries and marine surveillance, but instead, they were actually partially used for public bribery back and forth with the government. Just a few years later, a controversy involving the bank's secret monitoring operations forced a CEO, Tidjane Thiam, to resign in early 2020. Now, just 5 years after taking office was when that happened to that guy. In the same month, the bank was also required to freeze $10 billion in its supply chain finance funds connected to the bankrupt British financier Greensill Capital, so they advertised this as a low-risk investment. And it actually lost a total of about $3 billion in clients' funds on that one, so it was absolutely high risk. When you might believe things couldn't get any worse, just a month later, the bank found itself in the middle of the infamous Archegos capital management affair, which was terrible for it. Credit Suisse suffered a $5.5 billion loss as a result of the collapse of this U.S. investment. Then less than 9 months later, they started working for the bank Antonia. Then, less than 9 months after starting work for the bank, Antonio Horta Osorio resigns as chairman due to a violation of the COVID-19 quarantine rule, which allegedly included going over to the Wimbledon tennis event. In this same year, the Swiss secrets data leaked when an international media investigation found that Credit Suisse was used as a safe haven for money by dozens of international organizations, including people you may have heard of, heads of state, drug lords, and businessmen alike, who have all been publicly identified as being involved in serious crimes like money laundering and violation of human rights and trafficking and illegal drugs. An astonishing breach that contained information on more than 18,000 bank accounts holding more than $100 billion served as the foundation for the inquiry. Now, these claims were denied by Credit Suisse, but the information is right out there. At the end of March 2022, a Bermuda judge ruled that the former Georgian Prime Minister Bidzina Ivanishvili was entitled to $553 million in damages as a result of Credit Suisse Life Bermuda's errors. My gosh, got a leaky ship here. In June 2022, the Federal Criminal Court of Switzerland found Credit Suisse and a former employee responsible for failing to stop money laundering by a Bulgarian cocaine trafficking ring between 2004 and 2008. And a little slap on the wrist there. We have $2.1 million fine was imposed on the bank, which pretty much seems like nothing compared to their billions. Now in 2023, the Credit Suisse comes to a head. Material flaws in internal controls over financial reporting are noted in Credit Suisse's 2022 annual report. Moreover, the bank stated that customer outflows had not yet reversed. They were losing customers left and right, despite saying they were stabilizing, which doesn't really sound like stabilizing, it sounds like the opposite. Credit Suisse then receives a $54 billion lifeline from the Swiss Central Bank just to support liquidity, and is the first significant international bank to do so since 2008 financial crisis. Of course, the Swiss authorities guarantee that Credit Suisse had complied with the capital and liquidity requirements imposed on systemically important banks. Now, at least 4 big banks are limiting new deals involving Credit Suisse and its securities, including Société Générale, the Deutsche Bank, and a bunch of others. The new leadership combination of Axel Lehmann and Ulrich Korner promoted returning back to Credit Suisse Swiss roots as the best course of action. In an effort to survive once more, they cut 9,000 jobs, and then they held a fundraising event publicly and eventually spun off the revived First Boston subsidiary and the US-based investment bank that they had acquired in 1990. Now, as a part of the fundraising, Saudi National Bank bought a 9.9% share in a private placement and is now Credit Suisse's largest shareholder. Yet investors were not very impressed by this ambitious idea, and the bank had experienced its largest annual loss since the financial crisis. Customer outflows continued to increase to more than $119 billion out the door, and the bank's shares plunged 15% at that time. When the chairman of Saudi National Bank rejected actually providing Credit Suisse with more support at this point, it sparked a panic sale that led to the lender's shares to decline by 24% in just one day. The Swiss National Bank's credit line has failed to regain confidence as Credit Suisse ends with daily outflows of roughly $10 billion. Now, have you ever had $10 billion falling out of your pocket each day? With the support of Switzerland's financial regulator FINMA, it is now allowing a takeover by UBS, since it is incapable of being further managed and of bolstering the Swiss nation's financial system. Credit Suisse has now been acquired by UBS, a longtime rival, chums from around the block from like 100 years ago, in exchange for $3.23 billion in stock. They were throwing around those 10s and 15s of billions and all that, and now they're just getting sold out for 3.23. And the assumption of losses of up to 5.4 billion, so it's not even a great acquisition. Now the 167-year existence of Credit Suisse has ended, and poof, just like that. The question is now, what will happen to the remnants of Credit Suisse? Will it be stripped down and sold off, or will it be internalized by UBS? Well, only time will tell. What are your thoughts about Credit Suisse's collapse? I'd be happy to hear your comments below.